we have the hourly price chart for Apple Incorporated, stock ticker AAPL. So as we can see here, the stock is trading under a solid footing here to start the trading session. This would be the hourly chart. So each trading bar here will be equivalent to 1 hour. And we can see that, this initial price movement for today, has been bullish, and it has been strong enough actually to force the stock upward above its entire exponential moving average cluster. So if we could sort of hold these gains here, this will fall in line with the broader projection here, which was, calling for further upside after support zones would have been found at roughly 214.64. So we do have an important earnings release that will be seen shortly, and this will absolutely be affecting share price valuations. So we do need to identify some important support and resistance levels so that we can properly trade this stock going forward. So that's what we will be doing in this video. So currently, the price zone that we were watching to the downside does come in at this 214.65 level. And this was, the stock was really being defined by a trading range here, with the upper valuation coming in at roughly $220.50, $220.50, just below there. So, as we can see here, the stock has now broken above, broken out of this trading range here to the top side. So this is definitely a bullish move because we've currently broken this range, and we've broken above the exponential moving average cluster. In addition to that, what we've done here is we've sort of validated support zones from a Fibonacci perspective. So if we're looking at this dominant price move, which stretches all the way back to roughly June 21st, and then extends to the all-time highs, which were posted on July 15. We can see here that the stock did see a fair amount of downside here, in a few different waves here, successive trading waves here to the downside. As we can see here, we can kind of drill in here a bit. So this would have been the price action after the stock posted its all-time highs, and we can see we were seeing a series of lower highs and higher lows. The process. This was an emerging downtrend that was occurring. But as we can see here in the indicator reading, we've seen two different downtrends start to emerge here, and both of them have broken it relatively quickly. These downtrends did not remain in place for very long. In the relative strength index on the bottom of this price chart, this purple line here, we can see that the momentum reading does show some declines here on more than one occasion. But those declines are very short-lived. The stock does manage to break out of its downtrend here relatively quickly. So this does suggest that bullish positions are still viable at this point, even though we're trading at such high levels and high valuations. So currently this latest move is starting to send us into overbought territory at the moment. So we could start to see some slowdown here relatively soon. There is also a major event risk here, that's coming up with the quarterly earnings report from Apple. So, in my view, this is not a wise time to start buying the stock. If you're already long the stock, that's one thing, but this is not really a viable entry point here, because we're starting to enter into overbought territory, and then there is this significant event risk here. That does sort of make the stock, a bit vulnerable here to the downside in the event that we do see disappointing earnings numbers. So we'll sort of drill in here to the shorter term timeframes. Try to get a closer look at this recent trading range, which is now broken. And here we can see, we could sort of extend this here. We didn't really continue testing the downside of this range. Most of the activity was toward the top of this recent sideways trading range. But, here we can see that these latest moves have forcefully broken out here to the top side. So, this is a bullish event, but we would probably want to see a retracement back toward roughly the 220.60 level in order to start getting long again. Currently, we're trading at 223, just above 223.10. So this does suggest that we're a little bit off of the ideal trading level here. I do want to point out a couple of things in this 15-minute chart. So this 220.60 level, it is important because this did define the upper end of the trading range that we were watching, but it also came in contact very closely with this 200 period exponential moving average. That would be this blue line here. So, the break here was forceful. As we can see, it did create a gapping pattern in the chart. So if we did see a break back below 220.60, this would suggest that this price gap here would need to be filled because more than likely there are going to be orders here that were not tripped. When you're dealing with such a large cap company like Apple, it's very, there are so many orders out there. There's so many people trading this stock, that it's really highly unlikely that, that there are price regions with no orders. So, when you see price gaps like this price gap is ultimately going to need to be filled. We are seeing moves here to the top side. The response for Microsoft earnings yesterday has been largely favorable. The tech space is sort of moving higher after a period of long-term declines. So I will be covering some of the other stocks that are found in this sector: NVIDIA, Meta Platforms, Microsoft. I will be covering all of these videos today. So I do suggest that people look at these because this is a critically important earnings week. This week we had AMD, Microsoft already reported, Apple, Meta Platforms, and Amazon.com all report earnings this week. So this is a very important trading period because it does follow a strong period of declines, especially within the technology space, which has occurred over the last 2 or 3 weeks. There's a possibility here that we're dealing with an inflection point and that we could start to see movements higher. But we're going to need to see some fairly stable numbers, fairly strong numbers here from probably at least most of these names. I mean, if we start to see some misses here, this could start to weigh on the market as a whole, given the fact that, there has been so much volatility in the tech space, and there's just so many earnings releases that are happening during this, it's not a holiday, but it's, the summer trading period tends to be defined by lower liquidity levels. So that does increase unpredictability and the possibility for increases in volatility. So here's the current market outlook for Apple Incorporated, stock ticker AAPL. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.